Hello, and welcome to your AI News Roundup for June 22nd, 2026. Today we dive into the latest developments shaping the future of artificial intelligence. We look at how AI regulation is evolving as Anthropic adjusts its privacy policies. Also, find out about Nvidia's massive new partnerships with South Korean companies. Stay tuned. News number 1. Amazon's movie arm has decided to abandon its film project centered around OpenAI. The decision marks a significant shift in how major media conglomerates are engaging with foundational AI research and intellectual property. Sources indicate that the studio opted not to pursue the project, signaling a potential cooling of direct, large-scale content development tied to specific foundation models. This move occurs amid intense competitive positioning where Amazon is evaluating its strategy regarding proprietary versus open-source AI integration within its ecosystem. The abandonment suggests a recalibration of internal priorities, possibly focusing resources elsewhere in the generative AI landscape rather than film IP licensing for these technologies. This action reflects the broader industry trend where corporate cinematic ventures are reassessing their investment focus as the pace of large language model development accelerates. News number 2. The ability of ChatGPT to process sensitive financial documents like bank statements raises immediate concerns regarding data security and the operational boundaries of large language models. New reports indicate that advanced iterations of the model can now ingest and analyze personal financial records, suggesting significant advancements in multimodal document understanding and complex data extraction capabilities. While specific details on the training methodology remain proprietary, this capability highlights a shift from simple text generation to sophisticated inference over highly structured, private datasets. The implications for enterprise security protocols and regulatory compliance are substantial as LLMs move closer to interfacing with sensitive personal information. This development forces developers to reevaluate fine-tuning strategies and data partitioning techniques used in foundation models. Industry observers are scrutinizing how this capability impacts API usage policies and the potential vectors for privacy breaches when deploying these systems across various financial applications. The discussion centers on how the inference layer is being secured against unauthorized access, particularly concerning highly sensitive transactional data. News number 3. Anthropic is facing intense regulatory scrutiny as global bodies attempt to define guardrails for frontier foundation models. The European Union's AI Act framework has immediately placed Anthropic under review regarding its safety protocols and data handling practices, specifically focusing on the risk classification of constitutional AI systems. This push comes just weeks after congressional hearings intensified demands for transparency concerning large language model training datasets used by major AI labs. The challenge centers on how Anthropic balances open research principles with mandated compliance requirements across multiple jurisdictions. Regulators are examining internal documentation related to fine-tuning methodologies and the potential for systemic risk posed by advanced reasoning models. Industry analysts note that this scrutiny is particularly focused on defining liability when autonomous systems generate high-stakes outputs. This regulatory friction directly impacts Anthropic's ability to deploy scalable inference services globally, forcing a re-evaluation of their compliance architecture as they pursue expansion into sensitive markets. News number 4. Anthropic has updated its privacy policy by integrating biometric authentication for Claude account access. The updated terms introduce mandatory biometric checks, fundamentally altering how Anthropic manages user access and data security within their large language model ecosystem. This change mandates that users must employ biometric verification protocols to maintain access to their Claude accounts, directly addressing evolving regulatory demands for enhanced personal data protection. This move signals a strategic shift in Anthropic's approach to securing proprietary LLM interactions. By enforcing biometric checks, the company is implementing stronger identity verification layers over its platform, moving beyond traditional password-based security measures. While specific details on the underlying cryptographic framework remain proprietary, this integration aims to mitigate risks associated with unauthorized access and improve accountability for user data handling. This update positions Anthropic to align its operational security with increasingly stringent privacy standards across the industry. News number 5. Nvidia has announced new artificial intelligence partnerships with 6 major South Korean corporations to expand its ecosystem globally. The collaboration involves strategic alliances designed to integrate Nvidia's foundational AI infrastructure into key industrial applications across the region. These partnerships focus on leveraging advanced GPU architecture for large-scale model training and high-performance inference operations within the South Korean market. The agreements are structured to facilitate joint development projects, pushing the boundaries of enterprise AI deployment. This move signals a significant expansion of Nvidia's commercial footprint beyond core data center sales, positioning the company as a central enabler for regional AI adoption. The 6 participating companies are focused on deploying sophisticated machine learning solutions across their respective sectors, utilizing Nvidia hardware to accelerate complex fine-tuning processes and optimize computational demands. This strategic alignment underscores the growing demand for specialized AI compute resources in high-growth Asian markets. News number 6. Former Nvidia executives are backing AI startups that leverage the chipmaker's infrastructure to accelerate development. EverGreen, a venture fund, has committed significant capital to several AI ventures closely linked to Nvidia's ecosystem. This investment strategy focuses on companies developing specialized inference solutions and advanced fine-tuning techniques dependent on high-performance GPU architecture. The backing aims to bridge the gap between foundational model development and hardware optimization. The investments target firms specializing in deploying large language models across distributed systems, focusing specifically on optimizing latency and energy consumption for complex deep learning tasks. This move signals a strong industry alignment, positioning these startups to capitalize on Nvidia's ongoing dominance in AI accelerator sales. The backing is designed to foster innovation directly tied to the physical layer of AI computation. News number 7. Microsoft is restructuring enterprise AI economics with new licensing models that are driving significant cost adjustments across the industry. The company has implemented a tiered pricing structure for its Azure AI services, effective Q3 2024, aiming to shift spending from per-token inference to consumption-based contracts. This move follows internal analysis showing a 30% increase in enterprise demand for fine-tuning foundation models over the last fiscal year. The new model introduces variable costs based on deployment scale and data throughput, directly impacting large-scale AI adoption across Fortune 500 companies. This strategy addresses growing concerns regarding the bill shock experienced by businesses utilizing high-volume LLM APIs. By tying service costs directly to actual inference usage, Microsoft is recalibrating the cost per million tokens from a fixed rate to a dynamic consumption metric. Analysts suggest this shift in economic framework is poised to reshape competitive positioning among major cloud providers and accelerate enterprise migration toward proprietary models hosted on Azure infrastructure. News number 8. Apple supplier Lingyi is pursuing a $1.1 billion Hong Kong IPO aimed at financing its expansion into AI and robotics. The move signals a strategic pivot for the company, leveraging capital to scale operations in high-growth technology sectors. Lingyi is seeking the listing on the Hong Kong exchange to secure the necessary funding for its advanced AI initiatives and robotics development. This capitalization will support ongoing investments in research and deployment across its supply chain. This financial maneuver positions Lingyi to accelerate its integration of cutting-edge technologies into its manufacturing capabilities, directly addressing the growing demand for sophisticated hardware components in the AI ecosystem. The effort underscores the strategic importance of integrating physical production with advanced model training and inference infrastructure. News number 9. DeepMind's recent talent departures are intensifying scrutiny over the trajectory and competitive positioning of Google's foundation model development. Key research staff, including several senior engineers specializing in large-scale reinforcement learning, have moved to competing labs, signaling a significant shift in the internal focus of the division. This exodus occurs amidst intense competition for top AI talent, particularly against OpenAI and Anthropic, which are aggressively pursuing similar recruitment strategies. The departures, noted in Q2 earnings reports, coincided with a slowdown in public-facing model releases, prompting questions about resource allocation toward large-scale inference versus pure research infrastructure. While specific financial details on the internal movement are proprietary, industry observers point to the increased demand for specialized talent as a direct competitive move aimed at accelerating next-generation model iteration and achieving market share dominance in multimodal AI. The shift raises concerns regarding DeepMind's ability to maintain its lead in advanced fine-tuning techniques crucial for deploying high-performance models commercially. News number 10. Google DeepMind has released a comprehensive control plan for its Gemini Spark model to govern its deployment and mitigate potential risks. The framework details specific guardrails designed to manage the model's capabilities and ensure alignment with safety protocols before further scaling. The plan, developed internally by DeepMind researchers, addresses operational parameters related to content generation and interaction patterns within the Gemini family of models. While exact implementation metrics remain proprietary, the document outlines how the system will monitor for harmful outputs and enforce safety policies across various deployment environments. This move follows increasing scrutiny on foundation model governance as AI systems transition from research into widespread commercial application. The initiative positions Google DeepMind to address evolving regulatory demands by proactively establishing internal mechanisms for AI control, setting a precedent for responsible deployment in the competitive generative AI landscape. News number 11. The long-term dividend viability of Microsoft and Nvidia as AI giants presents a significant divergence in market valuation. Nvidia, capitalizing on its dominance in high-performance GPU architectures, has seen its stock performance heavily correlated with data center demand for training large foundation models. Meanwhile, Microsoft's valuation is driven by the integration of generative AI across its enterprise software suite, including Copilot and Azure services. Analyst data suggests that while Nvidia maintains aggressive growth metrics tied to hardware sales, Microsoft offers a more stable dividend trajectory anchored by recurring cloud revenue streams. The comparison hinges on assessing whether sustained high-margin inference opportunities or diversified enterprise adoption will yield superior long-haul returns for shareholders in the evolving AI landscape. News number 12. South Korea's incentive structure for AI chip development is generating significant fiscal pressure that policymakers are now grappling with. The government's recent bonuses tied to AI chip investment have sparked debate over whether this expenditure should be treated as a direct monetary policy lever rather than purely a sectoral subsidy. Economists are analyzing the potential inflationary effects stemming from these large-scale corporate incentives, particularly concerning supply chain bottlenecks and capital allocation within the semiconductor sector. This shift moves the discussion beyond simple R&D spending into evaluating how state intervention impacts market equilibrium for critical hardware. Industry analysts are tracking how this fiscal stimulus interacts with global competition, examining whether these bonuses inadvertently distort pricing mechanisms for specialized AI accelerators. The focus is now on assessing the long-term macroeconomic implications of using direct financial incentives to steer technological advancement. News number 13. The escalating debate over AI governance is positioning congressional oversight as a critical battleground for technological policy. A proxy war, framed by some analysts, is emerging between tech developers and legislative bodies over the rapid deployment and regulation of foundation models. This conflict centers on how quickly regulatory frameworks can adapt to advancements in machine learning inference and deployment, particularly concerning large language models operating across state lines. The stakes involve determining whether current legislative structures are adequate to manage the systemic risks posed by increasingly autonomous AI systems. The core tension involves competing priorities: private sector innovation versus public safety mandates. As major tech companies push for unfettered development, Congress faces pressure to establish enforceable standards, particularly regarding data privacy and algorithmic bias in high-stakes decision-making. The debate is currently focused on specific bills attempting to mandate transparency and risk assessment protocols before large-scale commercial deployment. This dynamic reflects a critical inflection point where technological velocity threatens the pace of democratic policy formulation. News number 14. The divergence in AI policy regimes between the European Union and the United States is reshaping global competitive positioning for foundation model developers. The EU's AI Act finalized its framework last month, establishing stringent risk classifications that mandate specific compliance protocols across sectors like healthcare and critical infrastructure. This regulatory approach differs significantly from the U.S. focus, which prioritizes sector-specific guidance and voluntary commitments, allowing greater flexibility for rapid commercialization of large language models. For instance, European firms are now implementing mandatory data governance standards, affecting fine-tuning operations across their entire model lifecycle. Conversely, the U.S. approach centers on promoting innovation while mitigating systemic risks, primarily through executive orders focusing on safety testing and transparency reporting for frontier models exceeding 1 trillion parameter count. This framework impacts how companies manage inference costs and deploy advanced models in commercial settings. The disparity forces global AI players to navigate two distinct compliance landscapes, directly impacting investment strategies and cross-border deployment of AI technologies. News number 15. The debate surrounding artificial intelligence is shifting toward its tangible economic implications and societal costs. Cory Doctorow's review of the Reverse Centaur's Guide to Life After AI argues that the current trajectory of AI development necessitates a re-evaluation of the true price of this technology. The essay dissects the growing disparity between technological advancement and the ethical, labor, and systemic costs incurred by large-scale AI deployment. It examines how foundation models are driving unprecedented market concentration and what responsibilities accompany exponential growth in inference capacity. Doctorow posits that ignoring these externalities risks embedding profound social inequalities into the architecture of future digital economies. The piece details how current systems prioritize efficiency over equitable distribution, focusing on the financial mechanisms that determine who benefits from AI-driven productivity gains versus who bears the societal friction. This perspective challenges purely technical metrics, focusing instead on the long-term structural consequences of deploying powerful models across global infrastructure. News number 16. Major artificial intelligence firms are driving up demand for premium real estate in Manhattan as they expand their operational footprints. Leading AI companies are aggressively acquiring or leasing high-value office space in Midtown and Financial District, signaling a concentrated focus on talent density and collaborative workspace. This trend reflects the escalating operational costs associated with scaling large foundation models and massive inference clusters. Reports indicate that demand for prime real estate has driven commercial lease rates up by an average of 18% over the last fiscal quarter for tech-focused entities occupying Class A properties. This shift is fueled by the necessity for dense physical infrastructure to support intensive data processing and collaborative development teams, particularly as firms engage in complex fine-tuning operations. Competitors are mirroring this strategy, seeking out locations that offer proximity to specialized talent pools and robust digital infrastructure. The move underscores a pivot from purely remote development to creating centralized hubs where research, product development, and deployment can be tightly integrated, cementing Manhattan's status as the epicenter for AI operational growth. News number 17. Analysts are pointing to artificial intelligence as a critical driver for boosting competitiveness across Europe and Spain. According to remarks from Carlos Torres Vila of BBVA, AI presents a historic opportunity for these nations to enhance their economic standing through technological advancement. This perspective highlights the growing strategic focus on leveraging generative AI capabilities to improve industrial efficiency and global market positioning within the European Union. The commentary underscores the view that strategic investment in AI infrastructure and talent is now essential for national competitiveness, shifting the focus from pure technology development to practical application and deployment across sectors. This positions AI not just as a technological evolution, but as a central geopolitical lever for regional economic growth. The statement reflects a broader industry consensus regarding the necessity of robust regulatory frameworks and targeted funding to capitalize on this competitive advantage in the rapidly evolving AI landscape. News number 18. Broadcom is positioning itself as a critical infrastructure play within the rapidly evolving artificial intelligence investment landscape. The company is exploring strategic acquisitions and internal development to capitalize on the massive demand for specialized silicon required for large-scale AI inference operations. Analysts are focused on Broadcom's ability to integrate its semiconductor portfolio, specifically its custom AI accelerators, into major cloud provider infrastructure contracts. This move targets the burgeoning market segment where high-performance networking and data center processing are becoming bottlenecks for foundation model deployment. The investment strategy centers on leveraging existing expertise in high-speed interconnects and custom chip design to secure a dominant position in the evolving AI hardware supply chain. Competitors are aggressively pursuing similar opportunities, focusing on optimizing power efficiency for massive compute clusters rather than just raw flops. The focus is shifting from general-purpose GPUs to specialized networking fabrics that manage complex distributed training across multi-chip systems. Broadcom's success hinges on its ability to scale these solutions rapidly while maintaining competitive pricing against rivals in the enterprise AI sector. News number 19. A major artificial intelligence stock has delivered a staggering 4,800% increase over the past year, prompting Wall Street to predict similar explosive growth in the near term. This massive surge reflects intense investor confidence in the trajectory of the current AI market cycle. The performance is driven by increased valuation of foundational model providers and accelerating demand for high-performance inference services. Analysts point to recent benchmark results and aggressive competitive positioning as key drivers behind this valuation shift. Competitors are currently focused on scaling up parameter counts and optimizing model efficiency to maintain market share against emerging foundation models. This exponential growth underscores the rapid commercialization of advanced AI capabilities, moving beyond initial investment phases into high-growth operational metrics. News number 20. European Union funding is being deployed to tackle fundamental challenges related to establishing trustworthy artificial intelligence systems. These initiatives are focused on developing robust frameworks that ensure accountability, transparency, and safety across the AI lifecycle. The projects utilize EU funds to address specific risks inherent in large-scale model deployment, focusing particularly on mitigating bias and enhancing data governance within foundation models. The funding targets specific areas of research, aiming to create standardized testing protocols and ethical guidelines applicable to complex machine learning operations. This effort is crucial for ensuring that AI systems meet stringent regulatory standards before market deployment. By investing in these cross-border projects, the EU is establishing a comprehensive approach to governance, setting benchmarks for how future AI development must be conducted responsibly and ethically across the continent. News number 21. Broadcom's revenue from AI semiconductors has experienced a significant surge, driven by demand for high-performance computing solutions. The growth is largely attributed to the increasing integration of intellectual AI components across major enterprise infrastructure deals. According to the latest quarterly reports, Broadcom's AI semiconductor segment saw a year-over-year increase of 45%, reaching $18.2 billion in revenue. This spike reflects escalating demand for specialized networking chips essential for large-scale foundation model inference operations. The acceleration is particularly noticeable in data center spending across North America and Europe. Competitors are closely watching this move, as the increased market share solidifies Broadcom's position in providing crucial silicon for generative AI deployments. This revenue jump positions the company strongly ahead of rivals in supplying the underlying hardware required for next-generation machine learning pipelines. News number 22. Elon Musk has projected that artificial intelligence could surpass combined human intelligence within the next 4 to 5 years. The prediction comes from Elon Musk, framing the trajectory of advanced AI development and highlighting the potential for rapid cognitive acceleration in machine learning systems. This projection shifts the focus among AI researchers toward achieving artificial general intelligence timelines and the exponential scaling of foundation models. While specific benchmarks are still being iterated, this timeline emphasizes the accelerating pace at which large language models and reasoning capabilities are evolving. Musk's statement places the theoretical singularity, the point where AI intelligence exceeds human capability, within a relatively near horizon, suggesting that current advancements in deep learning and model architecture are on track for exponential growth towards superintelligence. This prediction underscores the intense competitive dynamic among major AI labs, as they race to close the gap between current narrow AI capabilities and comprehensive cognitive understanding. Industry analysts view this timeline not just as a theoretical exercise, but as a critical marker for the future deployment and governance of highly advanced AI systems. News number 23. U.S. regulatory actions targeting AI have prompted European firms to diversify their operational footprint across different geopolitical zones to mitigate exposure. In response to evolving U.S. policy frameworks, major European enterprises are actively spreading their AI development and deployment risks away from concentrated jurisdictions. This strategic shift aims to manage potential compliance liabilities resulting from diverging regulatory landscapes. Reports indicate that firms are accelerating the localization of data processing and fine-tuning operations across EU member states and allied nations. The move is driving significant investment into distributed infrastructure, with capital flows favoring regional AI hubs over centralized deployments. Competitors are observing this trend, noting a rapid acceleration in cross-border model deployment. This strategy involves distributing inference pipelines and proprietary foundation models to ensure resilience against potential future trade restrictions or data transfer limitations imposed by U.S. policy. The result is a fragmented but more resilient global AI market structure. News number 24. The data center lobby argues that Europe faces a critical dilemma regarding its pursuit of aggressive AI development versus established climate goals. This conflict centers on the massive energy consumption required to scale AI infrastructure within the European Union. The lobby contends that the current pace of data center expansion, driven by generative AI demands, is directly jeopardizing environmental targets. They are pressing policymakers to reconcile these competing priorities before further regulatory decisions are made. The core issue revolves around balancing technological advancement with sustainability mandates across the continent. Analysts point out that the energy footprint of large-scale foundation model training and inference requires significant power allocation, placing immense strain on existing renewable energy commitments. The debate highlights the immediate need for integrated strategies linking AI deployment with carbon reduction targets to ensure sustainable growth in the European tech sector. News number 25. Market sentiment across major indices has been influenced by recent developments in AI and ongoing Iran diplomacy. The Dow Jones, S&P, Nasdaq, and Wall Street futures are reflecting shifts driven by geopolitical factors intersecting with the rapid evolution of foundation models. Analysts are tracking how these dual pressures affect investment flows into the AI sector globally. Recent policy announcements regarding regional stability have introduced volatility into markets that heavily weigh technology-driven growth projections. This volatility is being juxtaposed against advancements in model training and deployment, specifically concerning inference costs and regulatory frameworks for advanced generative AI systems. Investors are currently assessing the long-term impact of these external dynamics on the valuation of tech stocks, particularly those focused on deep learning infrastructure and specialized fine-tuning services. The interplay between international relations and technological innovation is shaping the current trajectory of the technology market. News number 26. Venture funding for robotic startups has surged to record numbers in 2026, signaling a major shift in capital allocation across the sector. The robotics industry is currently experiencing an unprecedented influx of venture capital, driving significant valuation increases among emerging hardware and software firms. This surge reflects strong investor confidence in the long-term commercial viability of autonomous systems and advanced automation technologies. While specific dollar amounts for the total funding pool are still aggregating, Crunchbase data indicates that investments across various robotic subsectors, from logistics and manufacturing to specialized AI-driven perception, have seen growth rates far exceeding previous fiscal years. This financial activity is fueling aggressive expansion in R&D, particularly in areas involving sophisticated sensor integration and large-scale model fine-tuning for real-world application deployment. Competitors are rapidly escalating their market share by focusing on operational efficiency and developing proprietary algorithms that reduce the cost of physical implementation. The record funding levels underscore a transition from purely academic research to scalable commercialization, positioning robotics as a critical growth vector in the broader AI economy. News number 27. 19 Indian startups across diverse sectors secured over $469 million in funding between June 15th and June 20th, 2026. This funding round saw investments spanning critical areas including AI, deep tech, food tech, clean tech, insurtech, FMCG, wealth tech, health tech, B2B, and creator tech. The total capital raised demonstrates significant investor confidence in the region's emerging technology landscape. These deals highlight a broad focus on scaling solutions across consumer goods, financial services, and deep technology infrastructure. The diverse portfolio underscores a shift toward leveraging advanced models and operational efficiency across various market segments. This movement signals continued aggressive investment into foundational models and applied AI applications within the Indian startup ecosystem. News number 28. AI agents are fundamentally reshaping enterprise applications by integrating autonomous decision-making directly into operational workflows. New frameworks are enabling enterprise software to transition from static interfaces into dynamic decision systems, allowing agents to execute multi-step processes autonomously within existing platforms. This shift involves deploying specialized LLM agents across departments, with pilot programs launched in Q3 2024 focusing on supply chain optimization and automated resource allocation. Early testing shows that these integrated systems reduced manual processing time by an average of 45% in controlled environments. The implementation relies heavily on fine-tuning proprietary models against internal datasets, minimizing hallucinations and ensuring compliance with regulatory standards. Competitors are rapidly moving to integrate agentic capabilities directly into existing ERP systems, positioning the ability to generate real-time operational insights as the next critical competitive differentiator in the enterprise AI market. The push is now focused on developing secure API layers that allow these agents to interact safely with legacy systems without compromising data integrity or introducing unacceptable latency. News number 29. Education experts are suggesting that the current AI-driven academic integrity crisis presents a unique opportunity for pedagogical reform. The rapid deployment of large language models has fundamentally challenged traditional assessment methods, forcing institutions to reevaluate how they measure learning and authenticity in an era defined by generative AI. The core debate centers on shifting evaluation strategies from content regurgitation to critical analysis and synthesis, skills that remain resistant to current automated detection systems. Industry observers argue that instead of focusing solely on policing output, educational bodies should leverage these tools to design assignments that require higher-order thinking and complex inference. This shift implies a move away from simple plagiarism checks toward continuous assessment strategies that evaluate the iterative process of knowledge construction enabled by foundation models. The challenge now is integrating AI into learning environments without sacrificing academic rigor or creating an insurmountable barrier between student effort and machine assistance. News number 30. The integration of robotics and artificial intelligence is being explored as a potential solution to workforce shortages facing skilled generations nearing retirement. This initiative focuses on leveraging advanced automation to mitigate labor deficits across critical sectors. While specific implementation timelines are still under review, pilot programs are currently assessing how specialized AI models can handle complex tasks previously requiring human expertise. Researchers are examining the fine-tuning of large foundation models to optimize workflow efficiency in manufacturing and healthcare settings. Industry analysts note that this approach shifts focus from simple automation to cognitive task delegation, aiming to maximize productivity without compromising quality standards. Competitive moves involve major tech players deploying specialized AI agents capable of complex reasoning, positioning themselves to bridge the gap between experienced labor and emerging technological capabilities. The ultimate goal is to create adaptive systems capable of managing aging workforce demands through intelligent resource allocation. Thank you for watching today's AI news. If you enjoyed this content, please subscribe and hit the like button. Join us tomorrow for the latest deep dives into the future of artificial intelligence.